Just the move from very low interest rates, I think artificially low interest rates.
Easter is one of the central holidays or holy days of Christianity. It honors the resurrection of Jesus Christ 3 days after his death by crucifixion. For many Christian churches, Easter is the joyful conclusion of the Lenten season of devoted prayers, fasting, and penitence. In Christ shall all be made alive. That is a great reason to celebrate. Most Nigerians, especially Christians, will celebrate this year's Easter in a simple, low-key style, as a lot of them are yet to recover from the disruptions of their socio-economic activities caused by the poorly implemented cash swap policy of the Central Bank of Nigeria. Given that the country is still recovering from the CBN's cashless policy, some Nigerians struggle to get access to cash. Some banks continue to limit customers' withdrawal to 5,000 naira, while others pay up to 10,000 naira and 20,000 naira, despite the government promise to make adequate cash available to the populace. Moneyline with Nancy took to the streets to find out how Nigerians enjoy their Easter celebration.
The Easter celebration was very okay. I think everything is normal. It's normal.
Compared to last year, we all know this is an election year, so many things went down. So obviously, maybe people are not really happy about the whole situation of the country, and then just maybe that's why this time around the Easter is a bit on the low. So everybody just celebrating, but on a low key, anyways. And then we just came out from the financial whatever. Now there's cash available. There's no doubt about that. But then the whole spirit is just low, the whole vibe and everything. But still, we bless God for everything, notwithstanding.
But it was awesome. Despite the cashless policy, all the hardship we went through, but at the end, we still have every cause to glorify the name of the Lord. Especially during this Easter period, we found out that things are much costly, like tomato, meat. Before we got all those things, we see that the price is more higher than the way it used to be before. But thank God, it was successful. During the days of Easter, my children hung out, but I, as the mother, I took my time to rest. I slept a lot. So I slept and wake up in the evening. So everything went fine.
The last one was better than this one that just passed yesterday. In what way? One, I will still thank God that the life is there. Secondly, this cash crop was not there last year. Thirdly, the goods in the market was not so costly as it is now. Are you seeing it then? Even fabrics, even wears, even shoes, things we are a bit better off that last year than this year.
Thank God, we thank God. Successful. Some have to eat, others don't have to eat, but all to the glory of God. A lot of people were so calm concerning that, and then the way it used to be, it wasn't like that, and so many challenges is involving economic and all that. So it's not really easy, but we thank God for everything. I went out with my family, visit family, and then to my church. We celebrate all together.
The Easter celebration was not good because of the cashless, but it was good, sha. So there was no money, so I didn't go out.
Because of the cash issues, we were not able to do much, even though it has been relaxed a little, but it's still affecting us in a very big way. We couldn't do it the way we should. I didn't go out because of the same reasons, because we couldn't access funds early enough before or during the Easter, so we didn't go out. Even though we thank God for life, but I think we are more free last year to do what we really wanted. In the area, you have your money, you have your access. But today, you have your money, you don't have access to it, so it will naturally make you not be happy, because what you have, you queue up in the bank to get it. You go for POS and they don't even give you, and you are just told, okay, this is the amount they will give to you. That amount will not even solve what you want to solve with it. You manage it, yes.
If I remember that, I think this Easter period is far better, unlike what happened 2 months ago. 2 months ago, everybody was finding it very difficult. Myself find it also difficult to lay hand on cash. But this very time around, I think there are cash. People were able to celebrate. But however, what happened last 2 months is still affecting many people, because many people, those who doesn't have the cash in the bank, could not have anywhere to access money, because many of them based on daily pay.
Maturity assets, and that really fundamentally changed the direction.
They want to make it a new face for Nigeria to attract foreign investors to come in to set up factory or set up assembly line, so that they can utilize the raw material of Nigeria locally and put into more like a value-added product and export. So we are now waiting patiently for that drop of the mutual protection of mutual investment with Nigeria and Taiwan to be signed quickly, so that Nigeria and Taiwan can move into attracting mutual investment into each other. Maybe you can export more raw material to Taiwan, or maybe we can have investors coming in. Actually, one of our biggest Taiwanese trader in Nigeria had already set up a very, very well constructed industrial zone somewhere between, I think, Ogun and Osun state, They are trying to attract Taiwanese investors. But we need to have that kind of agreement in between Nigeria and Taiwanese government to be signed so that it will have confidence and safety for our investors to come in.
It would, and the horror of the war is ever present. And
here is a new and refreshing offer for our esteemed audience across the globe. The new AIT Cloud TV is an online streaming service that offers you attractive opportunities to view our rich, exciting, and entertaining programs anytime, anywhere. AIT Cloud TV is available on the web on www.ait.app, Apple TV, Amazon Fire TV, Roku, and Android TV. You can also download the mobile app from the Google Play Store or the Apple App Store. Simply connect to the internet, download the app, register, and watch live or catch up on unlimited hours of exciting shows. AIT Cloud TV. TV on the go.
Taxes, but we look at systems to have a broader base for the taxes rather than higher rates, ways that allow the country, the people of the country.
Welcome back to the program. Like I mentioned at the beginning of this program, we'll be taking a conversation between the IMF chief, that is the managing director of International Monetary Fund, Kristalina Georgieva, and the World Bank president, David Malpass. But before we go into that conversation proper, I need to let you know that the IMF has, projected global growth to be below 3% in 2023. And the not so good news actually is that for the next 5 years, the world economy will grow below 3%. Among the various challenges which I had highlighted earlier, the cost of living crisis. Of course, we've seen stagflation in many economies of the world. We've seen also central bank raising interest rates amid lesser liquidity. I think I should hold my fire at this point and you take a listen to the very interesting conversation between the IMF chief and the World Bank president.
Together and then concentrate on what
Thank you very much. Hello, everyone, and welcome. We are starting off the week of meetings of the World Bank IMF meetings, the IMF World Bank spring meetings, with a big agenda. We want to talk about the world economy, about the debt problems facing developing countries, but the overall theme is how do we get better outcomes for people around the world, and especially for people that are on the lower end of the income scale, people in developing countries and people in middle income countries and advanced economies that are suffering from lower incomes and from the costs of climate change for instance. And so that's the thrust of the spring meetings. And I wonder, Kristalina, IMF does a lot of look at the global economic outlook. We are worried about the slowness of growth now and the prospect that it might stay slow. What do you think, and what are the big challenges?
Well, David, let me first thank you for honoring this tradition for us to start the meetings week together. You're right, we are yet again assembling our membership at the time of high uncertainty. The recovery we so much are hoping for, a robust recovery, is still a bit elusive. Why? Because we do have a significant inflation problem. That means central banks have to continue to keep interest rates higher to combat it, and that is on the way of restoring the prospects for robust growth. We have seen that this rapid transition from low interest rates, abundant liquidity, to high interest rates and much less available liquidity has exposed vulnerabilities in the financial sector. That made the task of policymakers even harder. So in that context, what we are projecting for this year is despite the remarkable resilience of consumer spending in the United States, in Europe, despite the uplift from China's reopening, global growth would remain below 3% as we projected it earlier this year. And what is more concerning, it would remain around 3% for the next 5 years. That does not give us high hope for meeting the aspirations of people, especially poor people around the world, and most importantly, poor people in poor countries. Let me stress 3 issues in that context. The first one is that this picture of growth is divergent. There are emerging markets that are doing better. But for frontier markets, for the poor countries, the future is not so bright. And in terms of income per capita growth, poor countries would remain below income per capita growth in middle-income countries. Dangerous divergence. 2, we have been wrestling with one crisis after another, one shock after another. And that has pushed on the back burden the longer-term agenda of structural reforms that are paramount to uplift productivity. And with productivity remaining low, the prospects for growth are low. And 3, the ropes that tie us together have become weaker over the last years. Fragmentation is deepening, and what it means is that what has generated tremendous impetus for growth and prosperity over the last 3 decades, an integrated economy, is being negatively impacted. We have done research at the IMF that shows that just the costs of trade fragmentation can run as high as 7% of global GDP over the years. So these meetings are an opportunity for us not only to talk about the immediate priorities of restoring price stability and safeguarding financial stability, but also about the longer-term prospects of growth and how prosperity can be an achievable objective for the lower income countries. Which takes me to you. How do you see that?
Exactly right. And as we look at it, the elements of growth into the future, it's important that there be more investment in small businesses, in new businesses, and that means a flow of capital. And a worry that we have for developing countries is the capital flow right now is out of developing countries. So for many of the developing countries, it looks like they're in a phase of decapitalization rather than recapitalization. That goes with your point that instead of having convergence, meaning people with lower incomes growing faster than people with higher incomes. So convergence toward a higher level, that's not happening right now. It's actually a divergence, and that's gravely concerning. That means inequality, that means fragility for countries, and we see more countries falling into fragility. One of the concerns with with high prices now, high prices are being applied to food and fertilizer, and a concern for the poorest around the world is the farmers are not able to plant, and if they don't get fertilizer, often they won't plant for the crop cycle because they know that their yields will be too low. And so an urgent need, and we've worked on this over the last 6 months, but it's still has room to come together, is that the fertilizer resources go to the people that can pay the most, and that means those farmers are providing the global crop supply. supplies. And so that's a challenge. Right now, for example, wheat supplies globally are at a low level. China has substantial stockpiles, but most of the other countries have drawn down their stockpiles, and so that points to a period of strain on global food supplies. I wanted to pick up on your point about the trade fragmentation. So as we think about that, trade is vital to productivity within the world. People swapping goods in their village, within their country, and across borders is a way to add value, to create more productivity. And to the extent that that breaks down into regional blocks or protectionist blocks, that's a concern. And right now, that's the direction of travel for the world. As it looks to stop the globalization and to reverse it, the risk is that it will come out with unproductive structures, and that also will weigh on world growth. And I guess I'll finish on your opening point that just the move from very low interest rates, I think artificially low interest rates, and the capital allocation that went with it, meaning investors all over the world were making decisions based on the idea that it was 0% interest rates for a long period of time, low for long, and that misallocated the capital. So to bring that back to productive uses is really hard. If you say, well, we're going to keep the interest rates at current levels or go to a more normal levels of interest rates, that means losses for banks that had a duration mismatch, as we saw with Silicon Valley Bank. And so there's losses being allocated by the world system now, but we should keep in mind, if you just lower the interest rates back down, it won't solve the problem. What that means is that people will suffer from inflation. The dollar weakens, the inflation rate goes back up, and that hurts the poor the most. So I think there has to be a goal of finding a low inflation environment and dollar stability for the future.
Very much agree with that. Central banks do have a preoccupation to bring inflation down, and it is paramount because without price stability, there is no sound foundation for investments and for growth. Their job has become more complicated because of the exposure of vulnerabilities in the financial sector. That means attention has to be paid to financial stability. Fortunately, they have different tools they can apply to deal with these two different problems. They can fight inflation by keeping interest rates higher for longer, and they can provide targeted liquidity should there be a need to bring down risks to financial stability. What we have seen is a remarkable, rapid and effective intervention by policymakers, primarily central banks, but not only. Financial authorities, supervisory authorities, regulatory authorities. Once there was a problem exposed, they acted swiftly. And this is very different to what happened during the global financial crisis. So there is something to celebrate. We learned a lesson, we act on it. However, when we look into the future, the problem that you outlined, allocation of capital, it has to be recognized that without the confidence that productivity is going to go up, how does it go up? It goes up when there is effective investment in education, skills development, adaptability to changing labor market needs. It gets up when there is effective investment in research and innovation, and it goes into private sector performance. It doesn't stay locked into monopolies that only have access to these new discoveries. And productivity goes up when division of labor that trade provides is effectively energized. I do hope that as we have these meetings to talk about the immediate pressing priorities of price stability, financial stability, we will pay more attention to how the world can go into a higher growth path. I apologize.
This is vital to the world. Getting the growth rate higher is important for people's jobs. It's important also for the migration patterns of countries. You know, if we're in a world where people have to migrate to other countries in order to have access to capital, that is a challenge. And they're being pushed by climate change. They're being pushed by their own countries having domestic debt problems. And so that pressure is substantial. So I think there's an urgency to the policy changes. Now, I want to inquire on one specific area. As the central banks raise interest rates, they've described it as a goal of reducing demand within the economy. I think there really has to be much more awareness that the long-term solution is through much greater supply, and that means short-term financing for small businesses, for medium-sized businesses. Right now, somehow we fell into a cycle, I think, over the last 10 years where the central banks were buying long maturity assets, and that really fundamentally changed the direction of the world toward bigness. Governments can issue 10-year bonds. Small businesses don't issue 10-year bonds. And so one of the things I hope we could do is really have a clear view. How do you get back to a world where short-term financing is available to businesses? We're not there.
I very much agree with this, David. It matters to everyone. It matters a lot to emerging markets and developing economies. We know that in emerging markets and developing economies, if the small and medium-sized enterprise there is simply no way to generate the jobs a growing population demands from in these countries. So that question of how we think about financing, accessibility to finance for everyone, especially led business, is something that the World Bank has researched for quite some time. This is again on the list of issues that got pushed down because of this shock upon shock upon shock. And I want to say we cannot finish this conversation without recognizing that one of these shocks, the senseless war in Ukraine, can go away by just a decision taken by the country that invaded Ukraine to stop the war. Why that matters? Why that matters what we are discussing here? Because one, this war has distracted the world's attention from many other pressing problems. This war not only kills people, it is pushing up food prices, you talked about it, and it is creating more geopolitical tensions, pushing down the ability of the world to work as one. So I want to recognize there is a problem there that these meetings cannot resolve, but it would help tremendously with the agenda we are discussing if it gets resolved.
It would, and the horror of the war is ever present. And as you know, it's the world's gone from the COVID pandemic to now this also horrible development and outcome, and lasting longer and longer than people had hoped. We've been involved, as you know, in helping channel world resources to the civilian sector of Ukraine as a maintenance operation, and we're also looking at the recovery side of the Ukrainian economy. We're talking in short shorthand to an extent because we see each other regularly and often talk about structural reforms and the upside opportunity that countries have if they can find stronger fiscal policy, stronger
domestic resource mobilization. Yes,
that means taxes, but we look at systems to have a broader base for the taxes rather than higher rates, ways that allow the country, the people of the country, to have more economic activity. And so that's the daily chores of World Bank and IMF of how do we interact from new investment, but the stars aren't aligned right now to achieve that.
Well, this is why it is good that twice a year we can all get together and then concentrate on what we can do by better coordination of our members and, of course, of our institutions. I want to bring an element of positivism in this discussion. Yes, it is a very difficult time. But if we look back in what we have achieved over the last 3 years, 3.5 years, it is a lot, David. One, we have managed to come together very early when the COVID hit. And collectively, the members themselves taking the appropriate policy actions and our institutions financing those that had no access to other sources of financing, that managed to bring the impact of COVID economically much further down than it would have been otherwise. I remember our first assessment of the risks of the COVID crisis was 10% contraction of the world economy. It didn't happen. 3.1 is not nothing, but it is far from 10% contraction. I remember you and I discussing how we can coordinate actions on financial terms, how we go together. Our very first loan was to Kyrgyzstan, Kyrgyz Republic, 1 week after WHO announced the COVID pandemic. Since then, we have financed 96 countries. Never in the history of the IMF we have done so much for so many, and we have done that together with you. We have recognized debt as a problem. I want to give you the credit for being such a strong voice, including your latest blog, on behalf of countries that find themselves crushed by the burden of debt. We have called for the debt service suspension initiative, and now we are in these meetings, David, and I am so very pleased we can tell our audience we are not letting our guard down on this issue. We are going to have the Global Sovereign Debt Roundtable, bringing for the first time all creditors, traditional, new, public, private, with the debt countries and with us, the key institutions, so we can sit around the table and find solutions to what otherwise can be devastating for countries. So we have done things together that would have been much less effective if we didn't have that platform. To everybody coming to the meetings, roll your sleeves. Let's continue in that spirit of getting things done. And since this is the last time I have this pleasure of sitting with you at the start of the meetings, David, what is your hope for the future? What do you see on the horizon for our institutions? What is the wisdom you would like to pass to all who are watching and, of course, to the grateful me?
That's awfully nice, and I pick up the word wisdom. So I don't know if I can achieve that, but I'm going to share a little bit. I'm going to go from the small to the large. 4 years ago, yesterday, I walked into the atrium here as president of the World Bank, and you were a mainstay of global development. Then at the World Bank, now at the IMF, and one of our one of our challenges was to try to find breakthroughs in countries. That was my hope. You know, we always had the vision of how do we get better outcomes for people in developing countries, but then we recognized that a way to do that was to have individual breakthroughs or regional breakthroughs, some new insight, whether it be in the area of currencies or of fiscal policy or of trade policy or of infrastructure development. So I'm still working to get breakthroughs. One of the ones we worked on early was Ethiopia. We saw that the dual exchange rate, they have an official exchange rate which is available to the few, and a parallel market exchange rate that is very expensive for the rest within the country, and it has not worked very well. I went to Ethiopia early on in May of 2019. You went, I think, in August of 2019, and we will again be tackling that in the Debt Roundtable and in our meetings this week to see if there can be a breakthrough, because the number of people's lives that are at stake is huge. I don't know, I didn't look up, but Ethiopia may have 120 million people. It's a large number and growing, and so creating a better future for them is both a macro challenge and then a micro challenge. Letting more imports and exports flow in and out through better systems is going to be vital for their growth and getting their living standards higher. So I wanted to start on, you know, a lot of what we've done over these my 4 years it has been on specific countries and regions. How do you solve problems in various parts of the world? But then that has confronted this giant macro overlay of the world of COVID, slow growth, rising interest rates, and the Russia's invasion of Ukraine. All of that conspiring in a way to give not enough money for any of the goals that we have for people in developing countries. So I feel good about you know, it's been a very busy 4 years, and prior to that at the U.S. Treasury working on similar issues at a very rapid pace. So I feel good about that. Very good about the World Bank group, all of our entities, but also worried, I guess I'll say, frankly, about prospects for people in developing countries. There's not a good avenue. I like your point of optimism. We have technology, we have institutions that care, we have there's enough money in the world, there's enough capital in the world to make it work. But my concern is it's all absorbed into a small group, and it's not working right now, and it takes some fundamental changes in order to make it work. It's been a pleasure working with you through these 4 years.
I'm very confident that solutions will be found. It is a matter of will, and then you find a way. I always remember in the context of these conversations, when we have a very steep mountain to climb, what Nelson Mandela once said: impossible until it is done. And I really look forward to engaging with our membership during this week, David, engaging with you, with our partners at the World Bank. Because if we can imagine a world in which the tremendous capital, the wealth that is created, is put for the bigger public good, in which we open up opportunities for everyone to reach their full potential, in which we deal with the tremendous challenge of climate change, then we can say Mandela is right. All of these things that we discussed that are so difficult, impossible until they're done.
The great theme for our challenging week ahead.
just before we end the program today, I hope that you've taken some things away from the meeting between the IMF chief and the World Bank president. That conversation was very crucial. And why was it crucial? To take us through the theme of this week-long spring meeting and what the two global shapers really think about the world economy. You would know that the IMF and the World Bank are the Bretton Woods institutions, and these two institutions really lend a support or give a lending hand, so to speak, to economies that are struggling. Nigeria is also part of it. You know that we've gotten a special drawing rights from the IMF and also facilities from the World Bank to help beef our budget, for instance, to help us in certain key projects. But some of the key takeaways which I took off from their conversation, three things which also the IMF chief did talk about. We have a dangerous divergent picture of growth between the frontier economies and the emerging economies. Secondly, our world, the global economy is wrestling with a lot of challenges, and it's for us right now to begin to fix it so that we can prosper and our recovery can be faster than it is right now. Thirdly, like what Kristalina Georgieva did say, that the rope that is tying us together is becoming weakened. A once integrated economy is now being impacted by various challenges. We are seeing the rope tying all of us together, weakening, and weakening by the day. That's the much we can take on today's edition of the program Moneyline with Nancy. It is still from Washington, D.C. It's actually a good weather, but when I'm talking good weather, it's cold. It's not like Nigeria. I will see you all again tomorrow, where we will be giving you back-to-back. You know, we'll be giving you what's happening here back to back. Don't be tired of me this few days, because you've been getting to see me here where we are with the global shapers, both private sector, government, and I must say that Nigerian representatives are also here. The Minister of Finance as well, that's Zainab Ahmed, as well as the Governor of the Central Bank of Nigeria, Godwin Emefiele, some directors of the Central Bank, as well as the Deputy Governor, Monetary Policy Directorate of the Central Bank of Nigeria. It's a wrap. Be the best you can be. Be the change that you want to see. I am Nancy Naji. Bye for now.